Good evening, folks. Welcome to Top Gun StockTrading.com. This video is for Thursday, 23 January 2014. What a day we had on the markets today. Like we predicted all week, we've been saying there's going to be some sell side pressure selling coming in this market. And this market at one point in the day was down over 2.5 points on the day before they came in and saved the day. As you can see, I got up a 10-minute chart here. So this is every 10 minutes is a candle. And you can see yesterday's close was up here about 184.35, and today it opened up lower and just kind of sold off. So it opened at 183.36, down a buck today on the open on the spiders, and just continued to sell. And like at 1400, it looks like somebody just flipped a switch, and the sellers disappeared and let the buyers come in and buy up this market. It's almost like a referee where one boxer's just getting pounded. And he's almost knocked out, and the referee steps up and goes, okay, waves it off, stops the fight. That's enough. He's seen enough, and that's what looks like it happened today. This market is so manipulated by the Federal Reserve, almost like the invisible hand. Too much selling, pressure markets gets down too low, and it looks like they might lose control of it. The sellers are called off, and the market is allowed to drift higher. And you might say, well, who are the sellers, and why are they the Fed's? Why are they listening to the Fed? Well, the Fed bailed them up. You remember back in 2008, the Fed gave them all these loans. The J.P. Morgans, the Goldman Sachs, the Wells Fargo completely bailed them out. Then gave him the billions and billions of dollars worth of loans. So in essence, they are at the hand of the Federal Reserve now, and basically do as they wish, in my opinion. Also, $75 billion in quantitative easing doesn't hurt either. So they have the capital to move these markets up and down, and when these markets get too much sell side pressure, and that's like a waterfall approach. The waterfall on these sell candles gets longer and longer, and the volume starts to increase. It's almost as if somebody steps in and calls off the fight, calls the dogs off, and lets this market recover a little bit. It'll be interesting to see where we open tomorrow. Friday is usually a low volume, light volume float day to the upside for the most part. We'll see how that happens. This V-looking bottom is a powerful bullish signal. Now this is a 10-minute chart, so this signal or impression on the market will only last, maybe a day or so. So if you're looking at a 10-minute chart, the results or the effect that you see, or the patterns and the candles and the timing and all that stuff will only last probably about a day. If you go to a daily chart, that you're reading that chart, those effects probably last 3 to 5 trading days. Likewise, you go to a weekly chart, those effects, will take time to play out, 3 to 5 weeks type of thing. So it's all relative. It's all scaled. So for this 10-minute chart, this V, I expect a higher open tomorrow and a light volume float throughout tomorrow. But getting into the next week, we could see some more sell side action. Depends on where we close tomorrow. First order of resistance is going to be about the 183.01. That's not very far away. So my guess is they might gap it above that level, 183.01. So my guess, I'm putting it out there right now, I would bet that they gap it above 183.01. And this kind of light volume float. And if they're lucky, they can get it up to yesterday's low, 183.93, before the market closes. We'll see. And that'll be a pretty impressive day off of today's action. But at one point today, it was marked down 2.5 points on the spiders. That's pretty significant. And to be honest with you, there was only 130 million shares traded hands, so it wasn't exactly heavy volume, which tells you that the retail investor wasn't in here buying this market up. Or the institutions were selling, unloading so much volume or so many shares that they flushed the market down, and then they called the dogs off. And you can see the hammer candlesticks. This is what you call a hammer candlestick. And at this position in the charts, and like real estate, the position in the charts of a candle means everything. The location of a candlestick pattern in the chart means everything. So if this candlestick right here, at the bottom of a chart, say down here somewhere, at the low of a chart near some support levels, you call that almost a bottoming tail. But here, it's up here, it's called a hammer, because it's in the middle of the charts, and it's a bearish It's a bearish candlestick. So I'm still looking for some slight downside pressure, but I can tell you, due to the Friday effect, the light volume float, it could gap this thing up above 183 tomorrow and just let it float up into the weekend. We'll see how that goes. Like I said, we called this correction, we called this selling pressure all week. I've been calling it since last week, since we got this big down bar day, that we're going to see some more sell side pressure into this market. I wouldn't be surprised if it happened again tomorrow, but due to the light volume, we'll see what happens. All right. So my stance going forward is basically neutral to bearish. So I am going to. Except with the exception of tomorrow, I expect some more weakness coming into this market next week. All right, let's move on to USO, off the spiders. Oil had another great day. We talked about yesterday. If we can get a 3-bar surge into this resistance level, it'd be a perfect short. Today, this morning, I thought we had it, or at least the second leg of that 3-bar surge. But towards the end of the day, oil kind of sold off. So we're not going to get that 3-bar surge, I don't believe. So we'll have to monitor it for tomorrow if we're coming into that. Looks like they had some sell side pressure. It got as high as 34.92. Before it started to sell off on the USO. So we'll see how it looks like tomorrow, but I would have more liked that candle to close near the highs, 34.92, up another 20 cents. That would have made me feel a lot more comfortable getting in a short at this level around 35.30 at the 200 moving average, but we'll see how it goes. Again, like I said, I'm leaning towards the wait and see for the USO short that we talked about yesterday. Gold had a great day today. It popped. I'm trying to get in a gold trade, but I can't seem to get my entry off. It keeps putting in patterns and then popping before it gets back down to my level. So I'm not going to chase it up here. I'll wait for it to put in a pattern and see we can jump on. So if we get wait for this thing to stop surging up and kind of put in some sideways consolidation with some support levels coming up underneath that, we can look to get in a trade. If it keeps going up, we'll be looking to get off a short, to be honest with you, a short-term swing trade short. Like I said in that article, I still believe 2014 is a bullish year on gold, despite what everyone's telling you in the at least the print, the big institutional print is putting out. I still think gold is bullish for the year. Even the gold miners are showing some strength towards the end of the year. So what I'm looking at right here is I'm eyeing up if I can get a 3-bar surge or some kind of surge up into this 200 moving average with gold. With a pattern there, I'll be looking to get a short off on gold, and I'll do that via the GLL, and that's the 2 times short of gold. I'll bring it up here in a second. I thought I had it on here. Looks like it went away. Anyway, GLL is the ticker. Let me just get that in there right now. And that is ProShares all short gold. So basically a 2 times short, like I said, of gold. And I'll be monitoring that. Like I said, we don't care which way the market goes. We just want to be on the right side of that trade, right? So gold shaping up. We've talked about it for the last 2 weeks, how gold was going to move up off those levels. Ever since back here when I got on the mic here, I said gold was bullish down here at 117. So it's moved up $4. That's not very much percentage. That's probably about about 3.5% move since we started talking about it. But we're still looking for it to pull back so we can get into this trade for the long term, and long term I mean for the year. So that's gold. Looking at the weekly pattern for gold, I think I put this out in my article here. This W pattern is playing out like a champ. So what do I mean by the W pattern? What is a W pattern? So just like it sounds, it's a move down, move up, down, and boom. Sometimes it'll put in the W pattern, and then you'll get a sideways consolidation. This point right here is where it's confirmed and you're feeling pretty good. If you can get that above support level, this is a powerful move up if we can get that in there. So we're looking to get in down here so we can ride this up all the way. So that's how gold's playing out. It's so bad when I get in that trade, but I'm going to wait for pattern to play out so we can get the best entry that we are able to. All right. Talked about HLF, Herbalife, yesterday, and I said one of the members had bought the calls here. Now, of course, I don't want to rub this in. I'm on a 4-hour chart. Let's get to the daily chart. Look at Herbalife today. We talked about yesterday how this is putting in a bearish pattern. I said, hey, I'd be definitely taking, if it were me, I'd be taking money off here at this red bar high here, just to take some profits. But it didn't get up that high. This pattern is dicey. Like I said, it's bearish, and today we got the big sell today. Like I said, I don't listen to the news. I don't pay attention to the news. All I do is read the charts, and the charts will tell me that thing could go down lower, and that's exactly what it did. It didn't get down to my buy level, 61.92, before it went up. That would have been a sweet long trade. It got down as low as 62.33. So I was 41 cents off before, 41 cents away from getting into that trade there for that Herbalife. That would have been a sweet long position. We would have been in the money exactly $4 already for that trade. And of course, that would have been just a day trade, a quick trade in and out. $4. That'd have been a quick, 500 to $1,000 trade, but we didn't make it by 40 cents. So be it. If I was still in this trade and I was still long, I would wait for maybe a bounce here, a couple more days. Maybe you get a bounce, but be careful. This starts putting in sideways consolidation, maybe a slightly up or 90 degrees here. I would be looking to get out of that thing pretty soon if I started seeing that. And again, you got maybe 3, 4, 5 days. I call it 5 days to evaluate that before I definitely make a decision. On the 5th day, I would. By definitely next Thursday, I'd be making a decision to get out of it, stay in or get out of that trade. Let's take a look at a couple trades that we were in. We talked about ARIA. What a pop ARIA did, up 81 cents, 12%. We were talking about this yesterday. I've been talking about this for a week or so ago, for a week at least. We talked about this sideways consolidation right after this move up, and that is classic, a bull flag, or in spirit of bull flag, with the moving averages coming into price action, and that creates that big pop there. So hopefully we can get a couple more bar surge into this and get weekend some more profits. Right now I have an end of money stop at 7.25 on this ARA. So I can't remember what I bought this at, but we are handsomely in the money with this. We're going to let this thing run and see if we can't squeeze a little bit more out of this one. Likewise, CNDO is setting up for a big move up. Today was only up 3%. 3% is nothing to be ashamed of. It's a pretty good move, especially for a one-day move. It's still sideways consolidation. Again, it's a micro, so you extend this out, expand it so we can see a little bit better. We'll see again, we had the up move, sideways consolidation, moving average coming into price action. It popped. It came right back down. So we'll see how that plays out. This looks like another minor surge here, some sideways consolidation. We'll see if we can't get a pop higher with some more velocity on that thing this time. Again, we'll see. I also have a break-even stop on the CNDO. Actually, I took profits on half of this. So I only have half of my position remaining. I took profits, I think, at 304 at the beginning of the week or last week. I don't remember. I put it on the trader forum there, and we'll be looking for higher prices on that, obviously, when that plays out. DXM got a 2% pop today. Nothing big, but hey, you can see it's starting to pop, starting to gain momentum here. I think, or I believe, this is classic. Again, I mean, this is as beautiful as you can get as a bull pattern here, a bull flag here, and it's coming into the time factor as well. So tomorrow will be a big day for DXM, and I suspect we'll get a big pop out of it tomorrow, just based on this pattern, based on timing, and based on my 3D trading system. That's telling me that this DXM will see some good upside action tomorrow. So that'll be the trade of the day tomorrow, DXM, when that thing pops. Win, we talked about, not that win, but this win. Said the thing was it was bullish, or excuse me, bearish. We said this was a reversal bar. Yesterday we had a lower low put in. Today we have even had a lower low as well and closed below that low. So 2 straight days of lower lows as well as closing at lows. So this is definitely some weak equity. It looks like the top may be put in, at least in the near term. We'll see how it plays out. If we can get a close below this 20, and I consider this the 20 moving average in itself to be a weak support level or a minor support level. The only problem is you have a pivot here. Well, not pivot, but some sideways consolidation here. So that's going to strengthen that 20 moving average. So we may get a minor pop here at the 202 level when it gets down there, hopefully tomorrow. So we'll be eyeing that up. If we can get down to 202 tomorrow, probably get a minor bounce, maybe a 1 to 2 day bounce, and then I'll suspect it'll go down lower sometime middle next week. So we'll keep an eye on that as well. Target we triggered into today, and not to pat myself on the back, but we talked about it's even on the Fox 3 alerts there. We talked about a 58.26, and look at the low of the day for target. It's 58.26, so we nailed that entry into target. So we're looking for higher prices, and this is even very close to a bottoming tail. Now, like we said at the beginning, if this candlestick is at the in the middle of this chart somewhere, it's just called a hammer. But if it's at the such as here, this candle right here is basically a hammer. But if it's over here at the low, relative low of the chart, it's a bottoming tail. Now there are some other requirements, for, highs, lows, and the close, opening and close of that to make it a bottoming tail. But if it meets all those requirements and it's at the bottom or top of a chart, it indicates bearish or bullish action to follow. And this is indicating upside action in the near future. So nice signal there. Again, that was off of master level, that 58.26, as well as some resistance levels further back in the year there. I'll take a look real quick and see what we got. I don't memorize all these trades. So the low here, 58.01. Yeah, so the actual entry price is a master level that I calculated for target, but we do have a pivot low here as well as a pivot high here. So it's pretty good support level. Not to mention the weekly 200 is right underneath of it, providing some support as well. So, like I said yesterday, Target's been getting trashed in the news based on the credit debit fraud scam they got going on. Not necessarily Target doesn't have going on, but they were victims of the credit scam there. So, so bad news in the press there has basically pushed this equity down. So that's where we like it. We like to buy low, sell high. The classic cliche in trading stocks. It's so easier said than done, but that's what we do there. 58.26, we nailed that entry again off a 3-bar surge, like we talked about. So we'll see how that goes. One thing I'd like to bring up is the FXC, the Canadian dollar. It was I'll go with the daily. This is also a bottoming tail. It's at a low of the chart. All right, and you can see it hasn't been this low in quite some time. We'll go see exactly how long it's been since it's been down at $89. So as you can see, it hasn't been down here since July of 2009. All right, so pretty significant support level in my eyes for this one. As you can see on the daily chart, it put in a bottoming tail like we talked about. And another factor that I use, and I'm going to show you something tonight that I use in the this is an experiment. I'm not sure you guys can see this. I'll have to play it back to see if you can see it. But I'm on the Commitment of Traders report. The government puts this thing out every Friday. and this actually thing will come out tomorrow afternoon at about 3 o'clock in the afternoon Eastern time. So this is basically last week's data. But I wanted to show you, this is a bunch of numbers in a chart. Doesn't mean a whole hill of beans to you until you know what's going on here. So the commercials is what we look at. Those are the institutional traders, the banks, the institutions that actually have to take physical possession of the commodity or the foreign exchange units, as in this case is the Canadian dollar. So these people are actually taking possession of Canadian dollars, and they're usually early to the party. I mentioned them in my gold article about the institutions buying up gold. Yet in the press they're saying that gold's going to have the worst year ever. So here's the Canadian dollar. Here the number of longs, 108,000 long, and they're 24,000 contracts short. These are the futures on the Canadian dollars, the futures contracts. They added 8,200 longs, and they added the 1,500 shorts. So they got longer, if you will, and they're 5 times long as they are short. So what's that tell you? The institutions are long the Canadian dollar, and they think it's going up. Again, this thing's they're probably 4 weeks early to the party. So we'll see how this goes. In my opinion, this is a bottoming tail on the daily. We should see some upside action over the following month. So this is probably one of my longer term trades or planned trades that I do, unless of course I get stopped out. But I'll stay in this trade for a longer time because I do have the backup, knowing that these commercials, these institutions are backing me up with these futures contracts. If you look in the news, I just saw it on CNBC. There's an article on CNBC.com about the Canadian loonie and how this is going to be another bad year and yada yada yada. Who cares, right? I don't read the news other than to kind of laugh at it and for comedy's sake, because I know either they're really not that smart, or B, they're trying to pull the wool over the average investor's eyes just to get them either to buy or sell whatever equity or commodity that they have. So it's really a scam, transfer of wealth. But it's interesting to watch, and my objective here, my goal here, is to educate our members so we're not part of the scam. We act like the remora that swim with the sharks on the side of the sharks. They're not the big fish that get all the glory that the sharks do, but they always swim with the sharks, and they basically feed off what the sharks shark scraps, if you will. So we just want to be the remora next to the shark, not necessarily the shark, because the institutions are certainly the sharks. All right. If you look at the futures contracts of the Canadian dollar, you can see, and this is real time. They're still trading pretty big. The ETF we just had up, the FXCs, which we're in, is the ETF of the futures here, and you can see on the daily this pretty big bottoming tail came in today. Basically, the Canadian loonie sold off in the morning, and it recovered, has some nice buy side pressure come in and push it up. I'll show you. We'll see what time it came in today as I scroll here. So pretty significant support at this level. Came in basically today at 1300-ish time frame, and it's kind of supported that. What's this look like to you guys? And again, it's a 10-minute chart. So what kind of pattern is this? A big move up, sideways consolidation, above some moving averages. What's that mean to you? Most likely Canadian dollar tomorrow will be moving up again. So we'll be looking to see some positive FXC tomorrow action. Again, this is a 10-minute chart, so the effects of that bull pattern are going to play out basically throughout tomorrow, and then it'll be done. So it's not over a longer term time period. So what's it worth to us? Not a hill of beans if we're in a swing trade and we plan on being it for a month, a couple weeks to a month. Just kind of fun to look at and predict the action on it, just to show how the charts do, in fact, tell the truth, and the media makes up the stories to fit the market's action. If you see today, talking to one of my buddies, told him that the market was getting smoked again today. He's like, "Oh yeah, what's the news?" I was like, "I don't know what the news is. Who knows what the news is? We don't watch the news here, right? We don't care. The media makes up stories to fit what's going on in the market, all right? And that's why the charts work. These are just basically a painting of the trader's emotions. All right, it's up to you to interpret the painting to figure out what kind of price action is coming in next and what's the institutions are going. These are basically, if you're a poker player, you get to see your opponent's cards. These are your opponent's cards right in front of you. If you know what the odds are, if you can be a good odds maker, you can certainly make money in this business. And that's what we try to do here, is we try to make you good odds makers, teach you the 3D system so you can profit for life. All right? All right, folks, enough of me preaching. That's the Friday. I keep thinking it's Friday. That's the Thursday evening video. I don't want to make it too long now. So we'll see you on the charts tomorrow. Have a good day.